Good morning, everyone. Sorry. Welcome to Admiral Markets. Thanks for joining us today. This is a live webinar, of course, and today's focus is on trendline trading. Before we do that, though, be aware of these disclaimers. First of all, this webinar is intended for a global audience, may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more about that and other details and conditions. Also, trading foreign exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer, plus you're aware of the risk involved when trading. All right, check out Admiral Markets Supreme Edition. You can find that when going to trading platforms and then clicking on Supreme Edition MT4. And there are a lot of extra features. There actually have been a few extra features added recently, including a high-low indicator, Renko, pivot points, time left to the next bar. So there are a lot of cool things there that have been added, besides already the 56 or so, cool things that existed before that. So free hand drawing as well, order history indicator. Those are the new ones. Besides, of course, already the cool things that were there in the past, such as this matrix here with the currencies, the correlation, alarm manager, sentiment trader, and a very useful way to manage the open and current trades and etc. and lot sizes. All right, we're going to use trend lines for defining the trend, looking for opportunities, checking if there are any filters, and using them for entries and even exits potentially. So trend lines are very useful. We'll talk a bit about the theory, but also, of course, use them in real life on currency pairs on today's market. Before I dive into the calendar here, I would like to ask you if you can hear me, first of all, if you can do a quick confirmation that the sound is working. So today, let's see. We have Euro consumer confidence, dollar GDP growth rate, and existing home sales, and some lighter news throughout the day. Those could be interesting. Last week, of course, last week Wednesday, we had, of course, the interest rate, and we had a session Wednesday morning, so we didn't know, but we said already that there was a good chance that the rate would go up. It did, went up to 0.5, and we got a new environment now. For the first time in 9.5 years, the interest rate in the U.S. has gone up, as you probably know, which is pretty historical. There's basically a generation, 10 years, right? Which is a pretty significant length of time. So what next? Well, the Fed already said, and the market is expecting a couple of rate hikes, but not anything near what we saw 10 years ago, when in June 2004, the last cycle of rate hikes started, and it lasted 2 years, and it went up from 1% up to 5.2. All right, 1% up to 5.25. Within 2 years, in June 2006, the rate flattened for a while, then started to decrease a lot with the Great Recession as we know. Now the market is not expecting that. The Fed also already indicated that that type of momentum of a rate hike is not to be expected. The market is expecting anywhere between 2 and 4 rate hikes. We've had one, which means we should expect 1, 2, 3 more within 12 months. I'm talking about. So by the end of next year, we might expect another 1 to 3, but probably not a 7 like what had happened almost 10 years ago. All right, so substantial difference there in what we can expect. The euro dollar, from a price point of view, did not move much, right? The euro dollar actually had a daily candle about 120 pips. Well, for such an event like that, 120 pips is minor, is small. It's actually a typical daily candle, nothing really out of this world. So that signals to me that the downside was, yeah, didn't really materialize during that event. For whatever reason, it didn't happen. There was the trigger, the catalyst did occur, the rate hike went up, the rate hike occurred, sorry, but we didn't get the major down day on the euro dollar, which shows to me that the bears are not that strongly in control as we might think. Um, and if you look at stats from Global Fund Manager, as I said last week, if there's one trade overcrowded, it's the long on the US dollar. So it seems that if it doesn't happen during an event like that, if we get a minor daily candle like this on such a big day, because this is the daily candle that occurred after the news event, or right, that's that Wednesday, that's the interest rate day. If an event like that is causes such a small downside day, then um, the likelihood of a euro dollar downtrend continuation is for a time being, right? For I would say for the next at least this year, obviously, but also maybe even into 2016, not so likely. I do expect the euro dollar to continue with the downtrend though, and I'll show you why in just a second and when, but not for the time being. And if it would have shown the downtrend continuation, we would not have had such a small candle, but at least something like this, 300, 400 pip down day, and it would have been probably enough momentum to break the 1045 bottom. As it stands now, price actually, all it did, right, was move a bit down from this high right here, that's that day, slightly down, and price on Thursday did have a bit of a follow through, but ultimately stopped at the 50 fib. Nothing spectacular really. So once again, I would like to ask you if you could confirm that you hear me. Um, if you could just write a Y or yes, that would be perfect, just to double check. Does anyone hear me? Just double checking here. Great, perfect. Thank you so much. So from that point of view, I already was a bit skeptical, to be honest, beforehand, and I skeptical about the fact that the downtrend will continue. From my time factor point of view, and you maybe you don't use this at all, so you might be skeptical about the time factor rule. But that was my primary, one of my annualized wave. One of the reasons why I didn't expect a break to the downside. I didn't expect the bottom break below 104.50, because from that point of view, 1, 2, 3, 4, 5, 6, 7. Nope, not happening. 8, and this is candle number 9. I didn't expect a break on candle number 9. This was momentum, and if it doesn't break, if this bottom doesn't break within 5 to 6 candles, in my opinion, the momentum is over, and the continuation of that momentum could happen, but probably after 13 or higher. So already, and this is, I think, let me check. This is April, May, June, July, August. Already August, September, I was saying that if it doesn't break soon, the momentum is over, and I'm expecting a break next year, April. Now, I was realistic enough to add, of course, that a interest rate could always be enough catalyst to push it and make something like that happen, but it didn't. Quite interesting enough, it didn't. So we got perhaps a double bottom here, and especially this month, which ends in 9 days from now, closes something like this, which is actually a bullish candle in the meantime, as you can see, despite the interest rate hike. If it does close something like that, I think that this could turn out to be a double bottom. Next month, we could see a retracement of this month's candle. I don't expect this month's low to be broken, but expect a bounce when it retraces. And I would expect actually, as I showed on Thursday's webinar, that January, February to show corrective candles as well, perhaps March as well. in either March, April, or May to show a start of a bearish sign. That could be engulfing twins. That could be a March candle with a big wick, like this, for instance. Both are equally valid bearish price action signals for a end of this correction, and then this correction is over probably, and we'll see the month after probably a strong candle break through that triangle, break maybe through this bottom as well, and then we should see a continuation candle after that, and then some smaller follow through candles, bring price basically down, in my opinion, to at least the minus 272 target. I would say, well, at least below parity. I would say at the very minimum, the minus 2 target seems very likely, and perhaps depending on how much momentum there is, maybe even to the minus 61.8 target at 085. Now, will that happen? We never know, obviously. With many of these euro dollar long-term expectations, I was pretty accurate. The only thing I think I missed was I expected this to go deeper, but it actually bounced. Well, those things can happen. I would this analysis is invalidated if price breaks above the 50 fib. That should be the max retracement. So I'm not expecting price to go up that deep, but if it does, that should be resistance. If it goes beyond that, then something else is going on. I actually would expect price the next month probably to stay below the 38.2 fib and above the bottom here, and just kind of stay in between, and then eventually break, as I said, to those lower areas. So what does that mean? Well, from my perspective, it means looking for a retracement next month for a bullish bounce, and keeping my eyes open March, April, May for a bearish monthly, weekly candles, because that could be a very interesting potential, I think, for a swing trade or even a position trade. Really, one of those rare moments that even a position trade could work because of I think in my obviously my analysis, the perspective for a pretty big move of, well, could even be 2,500, but let's say conservatively 1,000 to 1,500 pips. So obviously there's a decent downside. It's similar maybe to something like here, right, where this also was the start of a potential position trade because it was a rising wedge, and that I expected this to be the end of the triangle and an impulse to start. So similar, maybe not as good as last time, but similar potential or decent potential could be found next year as well, in my opinion. So that's the long term. Be interesting to see how this monthly candle closes once again. And as you can see here, this double bottom on the weekly chart may be already starting, in fact. And on the daily chart, I already had my analysis pointing to the fact that this is probably more an ABC, and it definitely seems more likely now more than ever. I wouldn't confirm it 100% as yet, but it seems very, very likely, I have to say. And especially after, of course, what happened with this strong spike, pullback, and I think that there could be a continuation now up to the minus 272 target at 112. Now, if it gets up to 112 this month, let's take a look. If it gets up to 112 this month, it would be actually engulfing last month already. So I'm not considering the quietness that could occur on the holidays. I'm not sure if it will get up there this month and whether it may happen next month after small retracement and then indeed the upside to 112 or even 114. That's something that I'm a bit hesitant on. But if I look at the daily chart though, if it were not for the holidays, I would say that this is break, pullback, continuation up to that target. Because we, in my opinion, finished this ABC, we broke above this trend line and this falling wedge, with with good momentum, respecting the 50 fib. So I would say that with two daily candles like this, it seems ready for a move up to that target. All right. Now, if price on the hourly chart manages to break below this support trend line, I would be a bit more cautious for the upside because in that case, this is a pretty okayish channel, nice channel here. And if it breaks the support of this channel, then what could also happen is that actually price is making a bigger correction. This could be part of the correction, and price could maybe correct down to the 61.8 fib, for instance, before bouncing, or even maybe even lower to the 78.6 fib before bouncing. But I'm not expecting a break of this bottom here. Any of these fibs, I think, will act as support, and or has a high potential or high chance of being support. And any of these fibs will be bouncing spots. So that could happen if price breaks the channel. If price doesn't break the channel, it stays in the channel, then as I said, I think I am looking for. I would be expecting this upside. Now, the only thing I'm a bit hesitant on is how much can it push still in the next few days. But there's still a lot of. Let's see, how many days do we have left? 3 days this week before the 25th, and then next week 4 days before the first. So yeah, maybe there is a chance it could break. There's still a lot of time left. Of course, it could go sideways for all those days, or majority of those days. But so far, the market is really not that quiet. It's still moving, and it's not gone into hibernation where it's doing like this. But that could happen at one point. So this resistance trend line, as you probably know, would be the trend line that I would be keeping an eye on for a signal that price is breaking out to maybe the double top as a conservative target, and maybe later on the minus 272. But so a trend line like this, I typically want to see a candle above it, resistance trend line. I want to see a candle above it, with a majority of the candle above it, with the close near the high, something like this. I can either take it at the close or a retracement of the candle for a breakout. With a support trend line, obviously, I'm looking for a break to the downside with the majority of the candle below it and a close near the low, opposite. So let's see how if price can push through it. This is looking a bit like a bull flag after some momentum here prior to it, as you can see. It's an upwards channel fighting against resistance. So it's an interesting triangle. And that's, of course, trend lines are awesome for showing consolidations and triangles like that. They're very accurate and clear in helping us identify those support and resistance levels. So I like them a lot from that point of view. And yeah, there's a lot of things we can use trend lines for. In this case, we're using them for channel and blue lines. We're using them for breakout spot and resistance. The orange, but we can use them for more. We can even use them like this. This could be a line to be cautious of, like we maybe don't want to go long into that line because it's a big resistance line on a daily chart, so that could be a filter. We can use it for bigger channels as well, not only small channels like this, but of course we can use it as well, like for channels that have more hits and more history. Oh, there we go, like this. And often it's very good to use middle lines, like a middle line like this, and even quarter lines. All right, the pound USD had a good one. Let's take a look at that. Here, very nice channel. I don't have those middle lines anymore, but let me add them. The middle line is a line that would be in the middle, simply between the top and bottom. Nothing fancy about it. But what is cool about the middle line is that it's well respected, or should be well respected if the channel is well done. All right, and it indicates kind of the buyer's zone or seller zone. In downside, of course, this is the seller zone. This is where we prefer to sell, the top half, not so much in the bottom half. And we can divide those halves again in quarters, even like this, if you really want to go into detail. And in that case, you want to be careful of selling. Specifically, you were very careful of selling in the lower quarter. It's actually more of a reversal potential, as you can see here. And you want to be careful. You want to actually be interested in selling it in preferably in the top quarter. And here is a small overthrow. That's when price exceeds the channel by a tad. Those things can happen. All right. So this is the channel we talked about last week a lot, and price is back at the bottom, right? We said here already, watch out, it's at the bottom, it could bounce. We said here, watch out, it's getting to the top, it could bounce back down. Now, same story. It could be in a bouncing spot, but on a 4-hour chart, I would say that it is making a consolidation zone right here, which means that a break there could be a bearish break and a bit of a fall here, 50, 100 pips perhaps, and then we will be back at the support trend line. Now, there are two things that can happen at that support trend line. Price could bounce again, or you never know, price could continue to break. And this channel that has held very nicely, has been providing guidance to us for very long. Those channels can sometimes expand, and the price could break those channels and give a new momentum in the same direction. It's a bearish channel, as you can see, but the angle is quite shallow. So what might be needed if you really want to see a good downtrend here is indeed an acceleration. Because if we look at it relatively to a weekly chart, you can see there's a big difference between this momentum and this momentum. You see the angle of those arrows a lot, there's a substantial difference there. The first one is a lot steeper than the second one. Actually, the upside from that point of view is a lot steeper than the second downside. So is that a bull flag? And will price actually break to the upside? Could happen. It's not something I'm ruling out. In fact, as soon as price breaks this channel above it, I would say that is a very likely scenario. But it has to happen first. Otherwise, it doesn't make that much sense to think about it. It's good to keep an eye on it. Obviously, if it happens, it happens. And then we know that could be a bullish breakout. And price could move up to minus 272 target, about 161.50-ish, which is also 61.8 fib. When putting a fib on from top to bottom here, you can see 61.8 stopped at the 50. That could be the next target. All right, but that's something of the future. For the moment, price is still in this channel, and if it does accelerate below it, that could be exactly the acceleration needed for this downtrend channel to get maybe a bit of a steeper angle like this. We would maybe not use this top anymore, but we'll change the channel like this and make the channel like that. All right, let me show that. Or let me actually do it differently. 1 second. Something like this could happen. All right, we will take these 4 hits. We got 4 hits, 5 hits. 6 hits. You see a lot of hits here on this upside. We need 3 hits for a confirmed downtrend channel. We got 6. That's more than enough. Why do I count this one, you might ask? Well, the difference is probably, it's about 20 pips here. If it's less than 30 pips, it's okay to count as a hit. If it's more than 30 pips, I would not count it as a hit on a downtrend or any channel. Sorry. Why do I count this one? You might ask. That's a small overthrow. Overthrows, as I already said earlier, is fine. Price can sometimes kind of push through channels like that, and it's fine to make a channel that cuts through a wick or even candles. That's okay. So this could be a new downtrend channel, and you can see that as soon as price breaks through this, we can see the angle of that channel becoming differently. And if we use this angle as a channel, then it's a lot more in line with what we would expect from an actual impulse and from an actual trend. So that's something we have to keep an eye on. And then price could do like this, and then hit this channel again, and boom, fall again. Maybe. Let's see. Time will tell if that happens, but that does happen, then that's the signal we need for really a strong downtrend. So when looking at the hourly, looks like price is at a consolidation point. We gotta need price to break through this bottom, and it's a bit of a triangle here, as you can see. So what could happen? Break below it, could be a small trade here down to the bottom. And if it breaks above, there could be a small upside correction, perhaps to 149.70. That could be a resistance spot again for downside. Now, I'm not really very interested in up or down here in this case. So I'm not sure how much I would trade this one. I think I like the euro dollar a bit better. I think the upside break could be very mild. Don't forget that this is, I think, from an Elliott wave perspective, still a wave 4. So I'm a bit skeptical about trading to the upside on a wave 4. The 38.2 fib is a 149.86. So there could be a kind of a zigzag up to that fib. In fact, if there is any good trade, I would say it's almost waiting for price to get up to the 38.2 fib and shorting it. There, I would say, I think that could be an interesting trade. Considering today, I think that I would not put a pending order there. I would just wait for price to get there and wait for a bit of a wick on the hourly chart to confirm a bounce at that level. Alrighty. Dollar yen is in a big consolidation, and with resistance and support nearby, these blue lines really indicating that triangle. And if it does break support, it could be a big thing, because then in that case, 1 second. Let me put this fib on the daily chart only. From that point of view, obviously this is a big uptrend, big momentum. We've had several phases of upside. 1, 2, 3, 4, 5 of them. And from that point of view, I'm actually interested to see if we can make a bigger correction from an Elliott wave perspective as well. And from that point of view, if it breaks through blue, we could see maybe a bigger correction down to the long-term moving average. And from a daily perspective, price could fall, for instance, to these targets: 113.75, 110.60. Hang on. This long-term move average, 110.50. Okay, so maybe down to the minus 61.8 target. And this could be 1 correction, 2 correction, 3 correction, or as Elliott waivers say, A, B, C, for instance, right? not that strange. It would make sense to me. This has been already a sizable correction. We're talking about the sixth month, I think, already. One, two, three, four, five. This is the sixth month. December would be the sixth month. So if it doesn't break the top, the 125.50 top this month, that does not seem very likely, let's face it, then from my time theory perspective, this is the end of the momentum to the upside, for the moment at least. And that has not happened since here, but at that point there were bullish candles. The sixth was bullish, if I remember correctly. Hang on, one, two, three, four, five, six was bullish. One, two, three, four, five, six was bullish. One, two, three, four, five, six was a doji. Seventh was bullish. Okay, this was a bit late. The dollar yen, if anything, the yens do have that a bit as a characteristic, so that's something to be a bit cautious of. In any case, though, even um, if it's if the break happens next or the month after, it can always happen, of course. But the point is that it is a sizable correction at the very minimum, we can say. And if it breaks through the support trend line here by breaking through last month's low at 120.20, then I think we're definitely in a more bearish environment than bullish in the meantime. Or to state it a bit more cautiously, perhaps we could be in reversal territory here for a move down to. That's a bit too much, but on a weekly chart, down to 110. It doesn't have to be a straight arrow like that. Obviously, I could easily do something like this, right, before it really moves down. Now, how about if I'm not right, and that's what I think is the most likely. But how about if it breaks this top? I really was not I was skeptical that the price could break through it. So far, it hasn't, but let's see. And obviously, if it breaks through this resistance, then that could happen. Price still has some space to go before it hits this top. It respected the 78.6 fib, so it still has 88.6 fib, 124.25, 125.25, 125.50. But if it really wants to go up, it will respect those probably, and then be bought on dips and continue upwards. So that's the path that it would have to do before I would consider it would really have to break above 125.50 before the monthly trend is back into play. And I'm not jumping in a long right away, but that's the moment that I would say, okay, longs are now becoming interesting again. I will zoom into lower time frames to see if there's something. All right, in my Monday recap video, I was saying that this could be an interesting resistance level for short, but that really hasn't happened as yet. Nothing showing any signs of return. Now, anyone looking at this doji, that's a bit of a pity. I think that personally that was a bit on the weaker side. Could have been taken though, of course, and then a loss sometimes is unavoidable. Obviously, that's something part of trading. But I think it's a bit on the weaker side personally. Um, Now, obviously, there was a bit of a double top perhaps here, so there are definitely reasons to think about that. The trend line, so it's not impossible to consider. Probably not many of you were trading at that point in time. Anyhow, it's 2 o'clock my time or 1 o'clock or something like that. So it was Asian session, middle of my night. I was sleeping. Luckily, I didn't see it. But yeah, it's easy to say after retrospect, of course. But well, in any case, I can add that it never hurts to wait for a second candle. I like the two candle rule is often an interesting one, like this, for instance. Wait for the second to confirm the potential first. Sometimes, of course, you are a bit later with an entry, but sometimes it's worth just a tad more patience there in general. All right. Otherwise, this Aussie, yeah, it's in this triangle, obviously. And within that triangle, it's kind of a bit choppy, to be honest. It was support level here, turned resistance. Now we're above that again. We could have space maybe to the top. Well, with this breakout, it certainly seems that there could be a pullback, a continuation, but price is really pushing a lot at the moment. Might be best just to wait for a pullback of this 4-hour candle. All right, we got a series of upside candles, bullish here, not bullish, but higher highs and higher lows. In any case, as you can see here, all these candles are showing. So it's definitely in a good momentum at the moment, pushing through this trend line. So from that point of view, if it retraces this candle back to that red line about, let's see, 72, what is it, 25-ish, could be another retracement for one more, a few more bullish candles, getting maybe closer to this trend line. Now stop loss, I would probably not use this bottom because from that point of view, it's a one-to-one risk versus potential reward here is about one-to-one, which I think is not that grand when considering this choppy triangle here. You know, if it's a trade that has maybe a bit more muscle, it's a bit more likely. One-to-one is okay, but in this case, I think it's a bit meager. So from that point of view, I rather use a tighter stop loss, and I would use this candle low, 2 candles back. Oh, hey, strange. Okay, good. Or even this 4-hour candle low, not now, but of course next candle, and then this candle will be already closed. Both are possibilities, and it depends how tight you want to put it there. But both are definitely possibilities here that make sense. And then probably best to trail stop each candle low because we never know how far it can go. It could go one more candle and then all of a sudden just turn. So you really want to be a tight trail stop. Every candle, more or less, you want to really trail here, I think. Or I will trail, let me talk about myself. I would trail that because I don't want to get stuck in something like that, right? Because this could be a zigzag, and a zigzag, you never know how far it can really push. See, it could stop at the 61.8 target, it can make a retracement, then hit the 61.8, and that could be it. Boom. Alrighty. Kiwi. Looks a bit messy to me, but it has a similar momentum as the Aussie. So a similar game plan with the 4-hour candle might make sense in general. But the Kiwi could be a bit different. I had these trend lines here indicating the break of resistance that was needed here. All right, that was the level that first we broke, then failed to continue above it really with a double top, ultimately again breaking above it. We're now in a bit of a resistance zone, but otherwise it could be similar to the Aussie. Dollar CAD making a bit of a head and shoulders here. There are different ways how we can draw this trend line. One of them has already been broken. The second seems to be about to be broken. So head and shoulders here could be infect and break of the neckline as well. Ooh, 50-minute chart is a bit choppy. The moving averages are on top of each other. So I would not be willing to trade it unless price would have to show me a bit more muscle. I would like to see price really make an impulse and then a light correction like that, maybe a kind of a bear flag on a 5-minute chart, and then maybe the follow through, the continuation. But the 50-minute chart at this moment is not appealing to me. All right, taking a look at different time frames here on the Euro Yen. Seems a bit funny chart to me. Slow crawl up could indicate downside potential here. I think maybe the best way to tackle this one is using the 4-hour chart. Waiting for this 4-hour candle to close could be the second bearish candle after this bullish kind of channel. And that could be the signal, I think, for continuation, either immediately or maybe after a small little retracement here. That seems not that bad, I would say. I think waiting for the 4-hour chart here to finish is a good idea because 50-minute world is certainly not yet ready for a downtrend. You can see that pretty clearly, I think, when you look at the moving averages. This short term is still above the long term one. Right? So despite the trendline break, the moving averages are not aligned. I think that this is an interesting contrast when looking at here, for instance. If a trendline breaks there, the moving averages are still aligned with each other. I think that's a good differential to make when the trading trendline breaks, because at that point, I think there's less risk in trading the break in general than trading when the moving averages have already crossed and are bullish aligned. So I'll be a bit more patient here. I think the 4-hour world makes sense. How much of a fall? Well, I would still be careful of support here and support here. I know they're red, sorry about that. These levels. I'm not expecting, would not count on a break of this zone as yet. It could happen, but I wouldn't count on it when trading. All right, the pound yen already is showing interesting signs here. Strong weekly candle last week. And a weekly candle like that, especially at its current spot, and if we start drawing trend lines like this, there's definitely reason to think, okay, there are a lot of ways we can draw that trend line, but many of these trend lines will be broken with a candle like that. with a bearish candle like that. That is solid, pretty decent size, closed near the low, solidly below the 21 EMA band as well. And this is not the first time, this is the second time. This was the first time. This is the second time. Divergence between these tops target long-term moving average, and there seems to be space for that. So looks bearish. This is the sixth candle too. So definitely looking bearish. All right, so from that point of view, let's see if there's one obviously thing, but I'm not sure it's going to happen. But obviously, if we trace as part of that candle, that could be interesting resistance. We didn't expect to break above the candle high. But will we retrace that far? It's not that sure. Price is hanging below last week's low. No divergence on this hourly chart. It might just continue down to minus 61.8 target and then bounce. Something like this, for instance. Fall to target, then bounce, and then either here at the previous support, for instance, or even at one of these old fibs, turn back down to that long-term moving average. So from that point of view, if it does break below this 1 hour moving averages, then that seems to be doing that right now, in fact. This fractal is about to be broken, or is it? It already is broken, in fact. Let's see. By about 6 pips. That could be already a breakout signal for a fall down to, well, this 272 target is still probably viable. Let's see. Price missed it about 25 pips here. And the next target will be the minus 61.8 target. Let me draw the fib a bit more accurately here. Maybe not on the weekly candle, but on a different time frame. Let's start with fibbing. Hang on. Start with this part. Target got hit here. We just hit the target again, in fact. Alrighty. So resistance spots, 38.2 fib, 50 fib. Those could be turning spots for downside, as I already said, with the weekly candle as well. That makes sense. And then if price would have to break below this bottom, really. 179.90. Break below the 180. I would like to see a good 1 hour candle push like that. Close below it. Bit of a retracement. And there could be a small fall, relatively small for hourly chart here, down to the next target, which then could be a bit of a bouncing spot again. And at some point, we'll see the trend continuation, but that's further a matter of further a future again. So I think it looks bearish, but I would like to see a candle close below this bottom and below the 180. Contracting triangle on the euro odd. Let's see, pound odd is has probably a bit more, I would say, yeah, a bit more reversal potential here than the euro odd. Euro odd already reached the long-term moving average. But obviously price could break through that as well, and it could continue with this downtrend. Well, one of the things we can keep an eye on is this trend line. That could be a break for the long term. It's this trend line as well, which could be a small break to the upside, but I would still keep an eye on the tops here and resistance levels because that could still be a turning spot as well. Two trend lines to keep an eye on. And perhaps even a trend line like this, which is kind of a mini triangle, right, that we already talked about. Pound odd already actually, well, depending on how you draw the trend line, is right at it. Obviously broke already this trend line here, but that was already a while ago. Back to it. Let's see. Has this resistance line, this resistance line, there are a lot of resistance line here, and it's in a nice channel, in fact, to the downside, like this, as you can see, similar to the pound USD. Price nicely breaking below this support trend line here, making kind of a ascending wedge, breaking below that. A lot of trend lines you can draw here, like this, etc. So it seems to be breaking, like the other Aussies. And momentum already established. A couple of good 4-hour candles here, pushing lower lows, lower highs, each one of them. So the only thing I think left is just to wait for the same thing next 4-hour candle. And be very, very careful with trail stopping it because you never know, it could bounce at a certain support level and make a retracement. You're in the season continuing lower. And pound New Zealand too. Sorry about that. That was from last week. Let's take a look at the weekly here. You can see it has a lot of space still to these tops and the long-term moving average. Definitely showing kind of a zigzag pattern as well. Let me get rid of these email addresses. At the moment, there seems not to be that much space, right? So either still a pullback or price has to get to the target and make a bigger bounce probably. Small pullback within these moving averages could be enough, unless it hits the target. Doesn't seem that likely on the hourly chart. So now at the moment, for me at least, Euro New Zealand could be a bit different story. That is breaking a trend like this. That could, if it gets a pullback, be okay. Pull back into one of these fibs, I would say, could be still okay for downside. Big consolidation here. Not that interesting. Uh, Otherwise, do you have any particular pair you would like to take a look at? Let me know. I think we looked at most of the ones that we usually take a look at, but if you have something else, just let me know. Or if you have any particular setup you want to take a look at, or any past trade, please feel free to send me a chat. You can take a look at that. And or trade management, anything really, anything that you want to take a look at, pair, trade management, old trade, new trade, setup, etc. Just from a interest point of view, let's take a quick look at some indices. You can see DAX having some struggles here as well. From a monthly perspective, we're running into 1, 2, 3, 4, 5, 6, 7, 8 candle. Could that be the end of this upside that we've seen so far since 2011 and 2009? Perhaps. How about oil still pushing below 40, still below that bottom? S&P also failing not really to push above this resistance. That could interesting. Very interesting. In between all these red lines, let me take a few away. Let's do like that, so it becomes a bit better. Staying in between this, basically still consolidating, really, right? It's a bigger support level there. And this is actually candle number 1, 2, 3, 4, 5, 6, 7. Also a very important one. So ultimately, maybe this is failing to really break above it. I don't know. So far, it's looking like that. Obviously, these levels are very important from that point of view. And could this be slowly but surely sending a signal of a head and shoulders? I think that's an interesting question that will probably get answered next year, but I think there's definitely a good chance of that if we're looking at the graph. I mean, it's definitely showing some heavy signals here that it's difficult for price to break through that resistance zone. So it definitely looks like there's a good chance here of that happening. So let's see. Always good to keep an eye on that. How about silver and gold? Let's take a look at that as well. Getting a bit of a bounce here, showing a bit of divergence between these bottoms, looking a bit corrective now at the moment, right? Looking a bit like a falling wedge. So if it breaks this resistance, we could see a bit of a relief rally, perhaps. Although you never know with these commodities. And looking like a channel more than a falling wedge on the gold, but still more corrective than impulsive, right? Overall. All right. Well, let's take a last review here of your dollar, and last chance for you to ask any questions if you have for me. And well, basically, I'm going to keep probably an eye on 50-minute charts. I'm not that much in favor now of a swing trade, I would say. Not really looking forward to holding the trade over the holidays, certainly. So if, you know, from that point of view, I don't think that that makes much sense. So I'd rather trade the 50-minute chart and definitely will be cautious if the market goes to sleep and we'll then stay out of the market. 50-minute charts at this moment, I would say only the Aussie seems to be and the Kiwi seems to be pushing very nicely, I would say. Yeah. And Euro odd, it's really the Aussie that at the moment is moving the most on a lower time frame. All right, let's take a look at this. You can see the moving averages being pulled apart. It's the only one that really has some momentum going on. Even the euro dollar really doesn't have it. It's at this resistance trend line, but on a 50-minute chart, it's consolidating here, right? So the euro dollar break to the upside could be a trade today, but at the moment the momentum is on the Aussie, and I think that waiting for this 4-hour candle makes the most sense. Or on a 50-minute world, if it does, for instance, make a retracement back to the, like make a retracement here, maybe back to this zone, could be a bouncing spot. Let's see if this gets back to the zero line. I think still the 4-hour chart is the best. Something like that. All right, tonight we got a webinar, by the way. We have a webinar on applying Fibonacci sequences for calculating targets, letting winners run. I think, in my opinion, is one of the most interesting things out there. I really just love using Fibonacci sequences for targets and finding the spaces where I can have a bit more chance of knowing that those trades can run for for a bigger distance. We're going to identify what the key breakout levels are. What is the difference between a range and a trend? When can we expect a trend? When can we expect a range? Uh, when do we have a better chance of locating a wider space for a higher target? So when do I expect that momentum? All of those questions can be, I think, very nicely handled with using the Fibonacci sequence. So that's tonight's focus. I think it's an exciting topic, so I hope you'll be able to join. There should be a recording, and it's at 5:45 GMT PM. Tomorrow we got a strategy webinar as always, and then it's going to take a look at scaling in on Wednesday evening. Thursday evening, nothing due to the holidays, and we kind of replaced it with today's webinar. All right, so hope you can make it then. If you're interested in some opinions from Leonard and myself, you can find out also, by the way, just a small promotion for ourselves by going to Analytics and Traders Blog. And Leonard's newest entry, our newest entry, in fact, was what strategy is best for you and why. Before that, we wrote about top 5 sports to accelerate your trading, 7 awesome trading movies you need to see. So that, if you're interested, take a look at that. Wish you all good trading and awesome days ahead, and hope to see you tonight or tomorrow. Cheers, everyone.